The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes to keep you abreast of what's happening on one of the most biggest expenses many of you have in your lifetime, I'll tell you. But anyway, I'm joined in studio with Chris Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian. How are you?
Hey, happy Saturday.
Happy Saturday to you. Okay, so we want to talk about the upcoming seminar coming up, right?
Yep, that's on November 11th. It's Ready, Set, Retire. It's held at the Financial Guys, and it's everything you need to know from A to Z to retire, talking about Social Security, health insurance, tax planning, navigating you
estate
through
retirement,
distributions, estate planning with some of the lawyers.
Right.
So great opportunity. You can call us at EG Tax at 632-7886 and we'll get you registered, or you can go to egtax.com and register, or you could call the Financial Guys at 633-1515.
And
we'll
everybody
get you
that's gone, this will be the third one we had. And every time we put on one of these seminars, people say, wow, that was so great. Because it's like, you know, when you go to the Taste of Buffalo, you taste the food and everything. Well, that's kind of how we do it. It's like a taste of retirement. And the professionals basically do like 5 minutes and explain what they do. And then there's no charge to sit down and talk to them. And you can just leave with any information that you got, and there's nothing on your end that ties you to them. It's just for information. So I think you'll really, really enjoy it. And again, it's Ready, Set, Retire. You can call the Financial Guys. You can call us, and we'll get you registered. Or you can go out to our website.
Yep, our website, the Financial Guys website. You know, many ways to register.
Right. Okay. Want to talk about, so you heard the weather report tomorrow, right? Uh-huh. They said 45, 46, 47 over the next couple of days. That's cold.
Yeah, it sure is.
So I wanted to talk about today, we have 2 months left to the end of the 2023 tax year. And now is your opportunity. Now it's chilly, right? And so you're thinking about keeping the windows, fixing the door, putting in insulation, and the energy credit has substantially changed. And if you do these energy conservation things now, as opposed to how it was in the past, you can actually cut $1,200 off your tax bill if you do some of these energy things, and another $2,000 if you kind of get aggressive with biomass stoves and things of that nature. So I wanted to talk about that to tell everybody what they can do to really cut their tax bill a lot.
Yep. I know people have been calling about this credit.
Right. And so when it's cold out, it's like, hello, we should change our windows. So exterior doors, and this is all Energy Star, you can get a credit of up to $250 per door, maximum 2 doors this year. And the other cool thing is it's year after year after year after year. So really, if you kind of spread this out, your improvements to your home, you're much smarter, because it used to be under the old credit, it was $500 lifetime. Right?
That's right.
This is $1,200 per year.
which is so nice. I know people would max it out in 1 year, and then the following year they would ask about the new door they did, the exterior door, and it wouldn't count because they already maxed it out.
Too sad.
Yeah, and it was like from 2008 or something that you got that 500. You know, it was crazy.
Right. And so that's completely changed. So anyway, I'm Esther Gulius, the tax lady. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. So exterior doors can save you up to $500 this year. Exterior windows are limited, and skylights are limited to $600. So, and it's 30%. So if you did $10,000 in windows, you're only going to get $600. So you actually would be better off like spreading this over a number of years.
Right.
Insulation and air sealing items are 30% up to $1,200. Central air conditioners with the highest rated tier, their limit is $600. Natural gas propane with the highest rated tier hot water heater with a limit of $600. Natural gas propane with the highest rating tier, water boilers up to $600. Heat pumps and biomass stoves with at least the 75% efficiency has a credit of up to $2,000. And now these are not deductions; these are credits, right?
That's right. That's
well,
right.
explain the difference between a deduction and a credit.
Sure. A deduction brings down your income, and a credit brings down your tax. So your income is what you take to the tax tables to get your tax. So a $2,000 deduction, if you're in the 12% bracket, saves you $240.
$40, right.
Where a $2,000 credit brings your tax from $2,000 down to zero.
Right, so it's actually $2,000 real dollars. Now, the other thing was we want to make sure that everybody understands is these credits are non-refundable. What does that mean?
That means that, so there's refundable credits. So non-refundable means if you have no liability, you're not going to get the credit. So
Right, so you want to make sure that if Flim Flam, the energy man, comes to your house and he says, you're going to save $3,200. If you have no tax liability, you won't save anything. But that doesn't mean that you can't use that. You just would have to tax plan. So what would somebody do if they have no tax liability and they want to do these credits, right?
Yeah.
They want to improve the heating and cooling in their home. What can they do to avail themselves of this?
So they could take more out of their IRA, sell some stock, sell.
If they have any income-producing
the land
property,
that you were looking at, or maybe some trees you got on your land, so increase your income. And so, as you said, you can take avail of the credit.
Right. So let's say, for instance, that you have an IRA with $100,000 in it, and you're retired, and you really don't have to file taxes. You could actually take out a lot of that IRA money, especially if you're married filing a joint return over 65. You could take out like $30,000 of that money, not pay any taxes, and actually to facilitate the credit, you might take out $35,000. Then so you say, well, what good does that do? That means that money hasn't been taxed, and you can put it wherever you want, and you don't have to pay taxes on that money again.
That's right. Exactly.
Right?
Yeah.
Right.
Okay. All right. And then the other thing, while we're talking about this, energy audits are another $150 that would go to reduce your tax liability. So I'm Esther Gullius, the tax lady, with Tiffany Fabian, Christopher Fabian. We're going to take a short break. 8030930, 8030930, star 930 on a cell phone. You can text us to 716-8030930. We're going to take a short break. We'll be back with your comments, calls, and problems after the break. Hey, to us, you are family. I'm Esther Gullius, the tax lady from EG Tax with Tiffany Fabian, Christopher Fabian. You want to ask any question, you're getting letters. The other day I got a letter from the IRS, and they weren't going to process my return until I called them and talked to them. And I thought, okay, so, they wanted to make sure it was really me. So I said, yes, it's really me. And so we had to do that, but anybody getting those kind of letters, you have to answer them or they won't process your tax return. Mm-hmm. So if anybody's gotten those kind of letters, I mean, you really do have to call. And if you can either go online or you can call them. And if you need help, you can call us as well.
We've seen that hold up somebody's mortgage.
Right.
They ignored the letter. So the IRS didn't get the return. They went to get a mortgage. They're buying a new home or something, and they're like arguing with us that it's our fault, and it wasn't us. It was them because the IRS didn't process it.
Well, I think a lot of people think when you get these letters that they're fake, but the way scammers do it is they email you, right? Sometimes they call you. The IRS sends letters. So if you ever get a letter from the IRS, don't ignore it. If you have any questions about its legitimacy, give us a call. The other thing is, I've noticed like this week, I think I've had 2 clients that have gotten letters. Both of them were 100% wrong. And had they not called us, they would have paid that liability.
Yeah, there was one that I did this week, and the IRS said they owed $10,000, and when I was done, they had a refund of $8. So
Yeah, I mean, $8 is better than owing 10,000. That's the way I look at it.
yeah,
But
yeah.
that's the whole thing is they have one of my clients got a bill because she was a decedent. She's the widow of a deceased taxpayer. They had a balance due. They paid the balance due. They credited it to her deceased husband's account and not to hers, and so we had to show that she had paid that liability on a joint return. So those are things that if you're getting those kind of letters, give EG Tax a call. We don't charge to help you.
Right. And I got to tell you, the IRS is very confused because I have a client, they've been fighting since for 2021's return, so a year and a half now. Their payment got processed as an e-check. They sent in a paper check. The IRS converted it to an e-check, and they're saying, you haven't paid your debt. And they're like, but the money came from my account. Sent them the copy of the bank statement, got the letter from the bank, everything. Oh, give us time, give us time. They just got a letter saying, we're unable to process. We can't find your payment. 2 sentences later in the same paragraph, we have your payment. We don't know how to process it. I mean, they're just as
Well, you know, maybe they're training those 87,000 new IRS agents, and these guys are learning stuff, right?
Yep.
But anyway, the bottom line is, if you're getting letters, don't just assume they're right, because in our experience, most of the letters are incorrect. If not totally incorrect, partially incorrect.
Yep. Yep.
Right? All right, let's, and 8030930, 8030930, star 930 on the cell phone, and we're going to go to Mary. Hi, Mary. How can we help you?
Hi. I've got a question regarding the electric hot water tank. What is the type of tier for a credit?
It has to be the highest rated appliance.
Okay. Thank you.
You're very
Yeah,
welcome. And that's a great question, because I just talked to a client yesterday who said that he's putting in a new furnace in Central Air, and I said, is it the highest rated tier for Energy Star or whatever the SEER tier? It's a SEER tier.
Yeah.
And
SEIR
he said no. Well, the thing is, you think about it, with these furnaces costing like $10,000, it would save him like $1,200 in taxes if he went to the higher tier.
Yep. And there's a text. It says, "I'm getting Windows. Do you get the credit when it's paid or installed?" And it's when it's
It has to be
installed.
installed.
Yep.
Yeah.
Yep.
Yeah, so in other words, your windows laying around your backyard is not going to help until they're installed.
And it can't be if you're building a new house too. It has to
Not
be
for a new house, has to be replacement.
Existing. Yep. Exactly. Yeah. So
Right.
really, really important things.
All right, and then here's this other thing, and I know that in Western New York, I mean, I'm not a great big fan of electric vehicles. As a matter of fact, tell what happened the other day when.
So I was with my
your cousin.
I was with my nephew and my
is he your nephew
Yes.
or cousin?
Nephew.
He's my nephew.
Okay.
Yeah, I was with my nephew, and they had driven here from Rochester, and he was sitting next to the wife and his wife, and they had, who's my niece, and they had 2 kids in the back seat, and she's like, "Okay, so we got this electric car." And he's like, "Yeah, but I'm not sure late at night if we're going to have to charge it somewhere on the way back to Rochester." And so, because they're not familiar with Buffalo, they don't know where the charging stations are, although I'm sure that there's an app and there's places that you could find out. But when you've got 2 kids under the age of 6, sometimes it's not always the easiest notion, right? So they turned home and they got the car that has
The gas
gas
car.
in it. Because
So what they did was they were halfway from Rochester to Buffalo, realized that maybe this is not a good idea to bring the electric vehicle, turned around and went back to Rochester, picked up the gas car so that they could come to this dinner we had in Buffalo. right?
Correct.
And so, with that in mind, we're going to talk about the EV credits, electric vehicle credits. So, if you do get an electric vehicle, you have to have income, adjusted gross income, married, filing, joint return under $300,000, $150,000 if you're married, separate, or single. Okay, the credit is based upon two factors: battery size and critical minerals. And each one is up to $3,750, which of a total of $7,500. And New York State also has an electric vehicle credit of $2,000, so it's $9,500, and again, non-refundable. And the new vehicle maximum cost to qualify has to be less than $80,000 if it's a van or SUV, or $55,000 if it's a car, a vehicle. Auto. All right, and you can also get an electric vehicle credit up to 30% of the first $4,000, and the maximum on a used vehicle, maximum cost $25,000. So that's another way of cutting your tax bill by $9,500. But okay, you really have to make sure that you have that kind of liability. So when you think about it, when your income is limited to $150,000 with standard deductions, I mean that would be kind of a hard thing to fit into there.
Yeah,
right?
yeah. I know our daughter in Chicago was looking at an electric vehicle, and her and her husband's income is too high, so they aren't going to be able to get the credit, and that's been a big deterrent for you. So you're saying $150,000 is the threshold, and that's not so high. And so,
well,
what if you have
$150,000 if you're single or married separate?
Yeah, and so what if you have
$300,000
kids,
joint.
and if you have
Right.
child care, and if you take other credits, I don't know, retirement credit, if you itemize, you might not have enough liability to utilize
To even
the credit.
right, so you have to be very careful. Now, the credit for the electric vehicle is fully transferable. So if you're somebody that doesn't have a liability, you can transfer the credit over to the dealer, and the dealer then can give you credit as a down payment. Then the dealer would get the credit.
And they would reduce the price of your car. It would be like a rebate.
That's right.
Which
Yep.
is a great option. It's a really
Right.
good option. I don't think
So
they've
for
ever
those
done
of you
before
that want to do the electric vehicle, you got 2 months to cut your tax liability for 2023. So all of these things are, it's getting cold, tax season's 2 months away. You know, these are things that you can do to cut your tax liability,
Yep.
Right.
right?
And I know, what were you going to say, Chris? It's gone. Chris tossed intern last night, so he's working on a couple hours of sleep. You know, I was going to say, somebody called the other day, and he asked questions about the electric vehicle credit, and he said he was trying to sort through it on his own and read the literature from New York State, and he just said it was so confusing. You know?
Well, it is confusing. I mean, there's so many, you know, you think that it's 7,500, but it isn't necessarily, because it's like so many kilowatts per, you know, for the battery, and you get X amount of dollars per each of these kilowatts once they come to a certain level. And the car dealers, I think, there's you know, they're the ones that have to give that certification that you then put on your tax return.
Right. That's what I was going to say. They have to give you a form. Your dealer has to give you a form that you then give to your tax preparer, and that gets matched with the IRS. If you don't get a form, you don't get the credit.
That's exactly right. And I will tell you, one of my clients is a car dealer, and he goes, we have no idea what's going on, because they have been remiss in giving all the details to the dealers. Right? I mean,
right.
even when I research things in the small print, it says more information is coming out later. Well, but now is 2023, right?
Yeah, now is later, and there's still
Right.
nothing.
I'm Esther Gulius, the tax lady. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Are you interested in an electric vehicle? Have you? What are you feeling about that? Are you reticent to buy one? You feel like this thing's getting smushed down your throat? I know I am. Anyway, let's go to Jim.
He hung up.
Jim and he hung up.
He hung up.
Okay.
He
well,
must have gotten his answer.
well, there you go. But yeah,
His
How do you
battery
guys
must have
feel?
died. He probably didn't charge.
How do you guys feel about this?
The electric vehicle,
Yeah.
you know, my dad worked at Ford, and so I listened to the car coach and I listened to all this conversation out there, and I hear that dealers aren't making money on any of these electric vehicles, and so I just feel like there's a little bit of it being shoved down our throat.
A little bit? Yeah.
I don't think I'm ready for an electric vehicle. How about
No,
that?
I always I tell my client it's the truth. If they would have perfected the Prius engine, which runs on gas and then produces electric
Yep.
to run it, I think people would be more willing to do that because you tell somebody, hey, you want to get 80 miles to the gallon? And even if it snows out, you can still use
That's
gas.
true. One of
said.
my clients bought a hybrid like that, and it's a little hybrid truck, Ford hybrid truck, and he gets like 60 miles to the gallon, and he's thrilled with it because he never has to plug it in, and the gas, when the car goes, it charges the battery, and when the battery gets low, it turns over to gas.
So what do you think about EVs, Esther?
Well, I mean, especially up north. You know, I think about the snowstorm last Christmas Eve, 8 feet of snow,
Right.
where people were out and about, and it's true, the battery loses its effectiveness in cold weather. And not that it gets cold in Buffalo, but you know, anyway. But anyway, on the other side of the break, we got a break for news. We're going to talk about some other things you can do to reduce your tax liability. 8030930. 8030930, star 930 on a cell phone. Text us at 716-8030930. We'll talk to you on the other side of the news.
We are family. I got all my sisters with me.
Hey, to us, you are family, and I'm Esther Gillies, the tax lady. My whole thing is to make sure that you know, because it's all it's hard. Taxes are hard because they keep changing it, and there's all these regulations. Like right now, when I gave you this thing about exterior doors, windows, etc., there is all this backup information that you have to actually go and look to make sure that they qualify for Energy Star, or else you don't get the credit. And so if you take the credit incorrectly and that you get audited and they ask for proof that it's Energy Star or that it qualifies for under Building Energy Codes program, and you can't prove it, then you have to pay it back with penalty and interest. So that's our heart, is to make sure that that you get the best deal and you pay the least amount of taxes, right?
Right.
That's
And
right.
we don't even know, like, because this, I'm assuming this will only be a mail-in audit where they're just going to send you a letter. Please provide proof of your new windows.
Yeah, and don't throw away
And
the
if
receipt.
you don't have that receipt, they're going to bill you back the $600.
Right, and that's a lot of, $1,200 is a lot of money, especially after a year or two. If they send you with penalty and interest, it ends up being closer to $2,000. And most families are struggling as it is, making ends meet. You certainly don't need that kind of problem.
Yeah, Chris and I sat with a client yesterday for 2.5 hours or something like that, and he was making really good plans. He's starting a business, a restaurant, or his son already has it, and he's thinking of buying in as a partner. But he was asking really good questions about sales tax, about employee tax, about liquor tax. I mean, every little nuance, he was taking notes.
That's
and
great.
Chris had a really good idea about switching something to an S corp, and so it's really important that you look at the whole picture, and that's what
true.
we're
And
here
if
to do.
you want to make sure that you don't listen to your neighbors and they go, "Oh, it's just cash. You don't have to include it." I'm going to tell you something. Now that the IRS, it's no longer COVID, they are getting their act together, albeit they're learning, everybody's learning it. But once they get their act together, they're going to start auditing people. And when that happens, you want to make sure that you did the right thing.
Right? I know we had somebody in the office the other day, too, that was like, well, what about cash? Shouldn't I collect more cash than credit cards? And, it's like, no, you have to report it all.
Right,
Yep.
right. And remember,
That's
if
right.
you're somebody that's
they
like
just
selling
try
bill
to
stickers,
get away with anything.
if you're somebody that's selling your bills tickets, right, you're going to get a 1099K this year, which I'm going to talk about in a minute. But anyway.
Yeah.
But, oh, and by the way, if you're an unemployed person and you're looking for a great place to work, we need our corporate headquarters needs a front end image person, a new receptionist. So whether you're a man, a woman, we would love to, if you're interested in being a upfront person, you love people, you love helping people, give us a call. We're looking for a new receptionist, and we're also looking for somebody to help us with our books. So we're looking for a bookkeeper as
Yeah.
well.
You want me
And
to read
might
this long-
say,
want me
with
to-
all those tax preparers, don't you have a bookkeeper? No, we have tax preparers.
Want me to read this long text?
Yeah.
Esther, I took a $50,000 loan from a portion of my 401k that was sitting in a cash equivalent earning 1% interest. I then took out an 8-month CD for 5.5%. I will be paying myself back 8% on the interest, but after 8 months. I plan on depositing the $50,000 back into my 401k. Is that an okay strategy? I also have a decent size 401k and Roth of $500,000, and that's Joe from Buffalo, New York.
Okay, so let's see. So he took out 50,000.
He took out 50.
And
He had a
he's-
loan or for 50,000 from his
Right,
401k.
and he's paying himself back 8%.
Yep. Yep.
Right?
He took out a CD for 8 months at 5.5.
And then he's going to redeposit the money.
Yep, deposit back the 50,000 into
And
my
he's
401k.
doing this as an investment strategy?
He doesn't say, but I think that's what I'm thinking. He's doing it as an investment strategy, right, Chris?
I would believe so. I mean, if he was only making 1% in his 401k and now he's making 5% outside of it, and he's going to put the money back in, he just made some money and he's
Right. Well,
paying
here's
himself
the
back
here's
more
the
than
thing.
he was.
Before you do this dog and pony show, Joe, you can if you check with your the people taking care of your 401k plan, they ought to easily get you 5.5% without you having to do this.
Yeah.
I
we
mean,
talked about
your
that during
cash
the week.
equivalent account, easily you should be able to get 5.5 to 6% right now. So then you don't have to do all the gyrations of paying yourself back 8% on something that you're getting 5.5% interest on. I'm getting 5.5 to 6% on all my investments right now. So, and I just signed up with an investment company. They're getting me 5.5%. So I got to believe that your employer ought to be able to get a cash equivalent of 5.5%. Then you don't have to borrow the money and you don't have to do all those gyrations. You can do it the way you're doing it, but you're really not making that much money off of, and you're doing it the hard way. You can just do it without borrowing the money.
Use the KISS method.
You know, and keep it simple, stupid, right? Right? I mean, that's, and if I'm misinterpreting this, give us a call, Joe. I'd love to help talk to you. But that's what I would do. I would go to my employer, take a look at the cash equivalent. You ought to be able to get some money markets, 5.5%, 6%. Then you don't have to borrow the money.
Yeah,
and
we haven't-
remember, to borrow the money, it's supposed to be an emergency.
Yeah. We haven't seen these interest rates in such a long time. And
Which is
so
terrible
it's
for
good to see people
if
thinking
you're
wisely.
if you're on a tight budget and you're looking at 30% on a charge card.
Yeah. Yep. Those rates are going up.
And speaking of budgets, if you need help with your budget, you can come to EG Tax. We'd be very happy to help you. There's no charge, but the bottom line on a budget is you have to tighten your belt.
Yep.
You have to not spend the money. And it's just looking for opportunities to not spend money. Right?
And
I mean,
people
to
don't
really,
like that.
To really make a successful budget, that's what you should be doing, is looking at ways to cut your expenses.
Well, when we were talking to that business owner yesterday, he's buying into his son's business, and his son is paying X amount for bookkeeping and X amount for renting out office space. So the dad was looking at the budget of the business. So really, really smart things to do. It's much like your household. You got to look at places where you can modify and
expenses.
cut. So
Yeah.
I mean, we did that just the other day at EG Tax. Our Christmas party was going to be $50 a plate, and we went to another restaurant that was $30 a plate.
Yep.
Right.
Yep.
And so $20 a plate on 150 employees is a big difference.
It is.
Yeah, I think
Okay.
Joe, hold on, sorry.
Yes.
Joe texted back in, there are no other cash equivalent accounts in our 401k. I asked our admin.
Wow. Well, then, I mean, for him to, that's really interesting. Well, I don't know. I guess I would talk to them and find out how not. But for you to end up on $50,000, for you to make an extra 4%, you're making what? $2,000 on 50 on
Yeah.
a year times 0.04. Yeah, you'd be making $2,000 in a year. You're paying yourself back 8%, which again, that kind of negates the money that you're making. So I don't know. It just seems to me that there should be other alternatives. But yes, you can do it, and you'll make a little bit, but not that much.
Well, how about, rolling half of his or 3/4 of his money over to an IRA? Because then you can redo your investments through the IRA.
That's true. In other words, what he's saying, Joe, is that take your $50,000, don't borrow it, just roll it over into an IRA.
Another
If your
qualified.
company will allow that, then there is IRA money for sure at 5.5 to 6%. Then you're in control of it. You can't touch it, but you're in control of it.
Yeah,
more or
rolling
less.
it over to another
Right?
qualified plan if they'll let it.
Good idea, Chris. Okay, want to talk, so things that you can do in the last 2 months, maximize your pension contributions. And remember, if you're highly compensated, and they think 150,000 is highly compensated, all of your catch-up provision has to be put into a Roth, not in traditional.
And that's a big change in the law, and so that's
Yeah,
worth
and they kind of
highlighting.
snuck that
Huh?
in there.
Huh?
And they kind of snuck that in
They
there.
did. They did.
Well, look at what they tried to do with Biden's bill last year that got voted down, thank God, with the Roths, where they were going to tax people's appreciation in Roths, and that wasn't even talked about, but it was written in the infrastructure bill. That's what it was called.
Right,
Yep.
right. So if you were to put $25,000 into your 401k plan in the next 2 months, it'll save you about $7,000 in taxes between state and federal. And so that's a great thing to do. Don't ignore the IRA for your spouse. A lot of times, let's say you're partially retired or fully retired, you got a part-time job, maybe making $20,000 a year, and your spouse is not working. You can put money in an IRA for yourself and your spouse, even though your spouse is non-working. And a lot of people don't realize that you can do that, thereby making most of the money tax-free, right?
Yep.
Yep.
That's right.
So it's like you worked without paying taxes. Don't forget, really important, the RMD. What is an RMD, and why should people care about this?
That's your required minimum distribution, and once you reach the age of 73, you have to take out, it's over your lifetime, how much is stated over the actuary tables. And so you take the amount in your IRA and you divide it by about 28 or 29, and that's how much you have to take out each year. I know Chris the other day at the office, there was Chris, the other Chris, signing somebody up for health insurance, and Chris was talking to Chris about the RMD for this person signing up for Medicare, and so he found out that she was only 65, and so Chris is like, "Oh, you don't have to take your RMD because you're only 73."
You're not 73.
I'm sorry, you're not 73, but I think she said that she
Then
wanted to.
Then it was an inherited IRA, which changed everything
Right,
all up.
right.
So, I mean, there's little monkey wrenches in everything
well, but
with
that's
tax
how
law,
the tax
and
law
that's
is written. Generally, it's like this, unless this, right?
yep. Yep.
And that's true. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Okay, so the RMD you have to do once you're 73. What happens if you don't?
There's a 50% penalty. So say you're supposed to take out $7,000, your penalty is $3,500.
Not true, hey, Chris?
Right? They just changed that law. Now it's a 25% penalty.
Right. That's right.
And you can fight it instead of paying 25%.
If you fix it right away.
If you fix it right away, they're only going to charge you 10%.
Right.
That's so nice.
Which, I mean, like Tiffany said, last year it was 50%.
Yep.
and it's been 50% from as long as I can remember. But they just loosened the restriction on not taking money out of your RMD to 25%. And if you fix it right away when you go see your accountant and they say, why didn't you take out the amount that you're supposed to take, then they can reduce it to 10%. So they're really loosening those restrictions.
Yep.
Right?
It's about time.
Okay, let's take a quick break. I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 and a cell phone. We'll talk to you on the other side.
We are family.
Hey, to us, you are family. And we want to make sure you know that in 2 months, the curtain closes on 2023. And don't say we didn't tell you, because we want to make sure you can reduce your tax liability, especially looking at some of these credits, right? Correct. And we got any text, Tiff?
There's a text that came in. It said, I laugh because it's short, but it says, will you be talking about the 1099K?
I was, and so that was like 5 things down on my list here, but we'll talk about it right now. So the 1099K is for, who gets a 1099K?
Over $600 from Venmo.
Anybody who uses any Cash App, PayPal, any form like that, $600 total.
Why should somebody care?
Because if you don't care and you get a 1099K for $5,000, you got to pay tax on that $5,000.
Right. Now, here's the thing. If you had a third-party payer, in other words, you got money, you were selling your tickets on, you sold Bills tickets, you sold, you have eBay, you're selling stuff, and it exceeds, it's $600 or more, they're going to send you this form. So this form then, as far as the IRS is concerned, this is money you got. Mm-hmm. Now then the burden of proof as a taxpayer is on you to say, is this taxable or not? So you have to put it on your tax return. If you actually were in business to make money, like you were selling Bills tickets at a gain, or maybe you were selling stuff from eBay that you buy and turn around and sell, or something to that effect,
Well,
where you would put that on a Schedule C,
But what if
and
you-
reduce it by your cost of goods sold. Go on.
And it's also, you go out to dinner with your friends, you pick up the tab and they Venmo you.
The money.
Their money. That's still part of this 1099K. So you
Right,
have
but-
to keep track
Right,
of.
but you need to know where that money came from. So if it was for selling something to make money, that's the Schedule C. If it was money that you got for maybe rents, maybe you got money from your parents for rent, and you're a UB student, well, that would go on a Schedule E, maybe. Or if it's just other forms of cash, you have to include the cash as miscellaneous income and back it off on another place of the return.
Right.
Right. And I
And-
think that's the point we were getting to is initially you're talking about if you're selling Bills tickets, but there's going to be ancillary people like Chris said, when he Venmos our daughter Venmos her. If it's over $600, she's going to get the one and she's got to back it off her return.
Right. And I mean, the young kids use Venmo all the time. I mean, these young kids at college, oh, you bought that ticket, here's my share. You bought this, here's my share, back and forth. And I guarantee you, in a year from now, we're going to have a lot of angry parents saying, why did my kid get this letter?
Right.
Underreporting.
Underreporting letter.
So understand, just because they send you the 1099K form doesn't mean that it's necessarily taxable. The burden of proof goes to you, the person receiving it, to facilitate the backup information that would say, oh no, this is not taxable. This is rent that I sent to my son. This is a reimbursement from tickets. This is a reimbursement from dinners. And so it's going to be incumbent upon you, the taxpayer, to keep track of where that money came from.
Exactly.
Or else you will pay taxes. And not only will you pay taxes, if it's for self-employment, you're going to pay a 15.3% FICA as well.
Yep. Yeah, I had
So-
somebody call the office the other day, and she has a full-time job, and then she started Ubering, or no, she's doing DoorDash, and so she's making about $300 a week, and so she was asking how much she should set aside, and so she just started, so it's not so much a problem for 23, but for 24, she's planning on doing it for the whole year. So, so you just really have
But
to
I will
make sure
tell
you
you,
plan.
if you're somebody that does use third-party payers, give us a call so we can get you squared away now, so it's not a big problem at tax time.
Correct.
Because you might just want to change the way you're doing business. I mean, in other words, if your kid is Venmoing money back and forth with his buddies, just say, "Hey, stop this, Tommy. This is not a good thing because this is a brand new thing that's coming down the pike. They voted on it a couple of years ago. It was supposed to go last year in 2022. They postponed it, and it will happen in 2023. We went to an IRS convention, and they're all excited. Aren't they all excited about that? They are all excited about that.
Yeah, I mean,
And if they're excited, that means we're excited.
right? And why are they doing this? And the thing is, they're doing it to get people to pay their fair share amount of taxes. I mean, because there's a lot of. I mean, I've seen some contractors go, "Oh, you can pay me through Venmo," because then they think they don't have to report it, but now they do. So
Well, they always did have to report.
right. But now there's a paper trail.
Right.
So
And so if you're getting third-party pays, this is for you. And even if it's tax time and you haven't gotten it, go into the website of the third-party payer because it's up to you to download the form if they haven't sent it to you.
Yep. It's sort of like somebody not so long ago, they had a cryptocurrency, but they didn't know to go and download the 1099 that accompanied it, the 1099B. And so you had to go onto the crypto site in order to get it. So.
Right.
and that's
And that's what's happening with electronics. I mean, so much of everything is they put it on you. You have to go into the site to download it.
right. And they're also, speaking of crypto, they are making that, I think, for 2024, that the cryptos have to issue 1099Bs now,
Right.
where before they didn't, but now
Right.
they're making them. So
Right. Okay. Other things you should do.
There's line one. I just got word from Frank that they're holding, and I
Yeah,
didn't notice.
okay. Hey,
Hello,
Mark.
I'm Esther Gilius. How can I help you?
Hi, Esther. I'm calling about, you started talking about the Venmo and everything like that.
Yeah.
It got me wondering. I've been selling some scrap gold, and I was wondering, can you be taxed on scrap gold?
Yes.
Good question.
Anything that you turned into cash, if you sold it and you turned it into cash or got a cash equivalent, you would get a 1099K for that.
But
Yeah.
to get that, they have to know your name and address and everything, right?
Well, if you're
Right.
doing it through Venmo
They know,
sends the
right.
1099K.
No, this is privately going into a jewelry store, and
Okay. Is it gold that you had bought before?
yes, it's old.
Does it
gold.
have a cost basis?
What do you mean by that?
In other words,
much did you pay for
was
it?
it like did you
Gift.
buy it for your wife and she passed away, or she didn't like it anymore, and so you bring it to the jewelry store and they're giving you money?
Passed away, yes.
Okay, so you have a cost basis then. So let's say you bought your wife a $10,000 necklace and now she's passed away, and you bring it to the jewelry store and they say to you, we'll give you $8,000 for the necklace. You would have a $2,000 loss on that, but because it's personal, you're not allowed the loss. Okay? But if you were in the process of saying to people, I will buy your scrap gold, and you're buying it for them at maybe $1,000 an ounce, and you're selling it to a gold dealer for $1,800 an ounce, then you'd have a taxable event. So if you're selling something that you had paid more for and you're getting less for it, then it's not going to be taxable. If you bought it for X amount of dollars and you're selling it at a gain, it is taxable.
But so it sounds like because you're doing it privately, you won't get a 1099K, but that doesn't mean you're not supposed to report it, Mark.
Right, you're supposed to report it.
And it goes on a Schedule D.
Supposed to report it. Okay.
Yeah. Good
All right.
Can't do
question.
anything today, can you?
Yes, sirree, Bobby.
Yes.
They'll
Thank
get
God
you
for
one
digital
way or
things.
another.
All right, I'm Esther Gullius, the tax lady. Let me tell you a couple other things before we're done. Yes.
I was going to say I had a client for the last few years. Her mother had passed away, and her and her sister, her mother had all this turquoise jewelry, tons and tons and tons, and they didn't know what to do with all this turquoise jewelry. So they started selling it on eBay, and the same sort of situation that he had alluded
Right,
to.
and again, if you inherit it, then you get a stepped-up basis, right?
Correct,
But
correct.
that's why people don't know what to do, and we're happy to help you. A couple other things: make sure that if you want to harvest your tax losses, that you talk to your financial planner. That make sure that they are selling some of your stock at a loss so that you can offset other gainers by it. Maximize your HSA contributions if you qualify. If you got a flexible spending account at work, make sure you use it or you lose it. Make sure your withholdings on track. You got 2 months. Give us a call. We'll make sure that your withholdings good. If you want to do deductible gifts, you could do 529 plans for your grandkids, and deductible, and it's deductible in New York State if you have a tax liability in New York State. The 1099Ks are a big deal. If you need help, give us a call. Estate planning. Consider a life estate instead of just gifting a house. That would be a good thing. Talk to your attorney. Don't forget, you get a stepped-up basis on a revocable trust, but not an irrevocable trust. And if you need any help, call EG Tax, because we're here to help you, right?
That's right.
There's no charge. We're very happy to answer questions, and there's no commitment. You don't have to commit to using us.
Right,
We'd
and
like
don't-
you to, but if not, we understand.
Don't forget, you talked about revocable or irrevocable trusts, how that Ready, Set, Retire, November 11th at the Financial Guys. Go to our website, and you can register right there.
Right. Okay. All right. Hey, I'm Esther Gullius, the tax lady from EG Tax. Give us a call during the week. Don't forget Ready, Set, Retire. If you're in a quandary about the 1099K, we will help you. Our website is egtax.com. You can click on there, ask the tax lady. You can write me. I'll write you right back. And that's it until next week. The Bills aren't playing tomorrow, so I don't have to have a heart attack. So I'll talk to you later. Thanks for listening. Bye-bye.